Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. Welcome back to the show, Mark.
Thanks for having me, Jim.
Mark, you're well-traveled over the last few days.
Doing a little bit of traveling, yes, not a lot, just out in Los Angeles, in the motor traffic capital of the planet.
Mark, do we have a special offer for our listeners?
We do. 2021 half off. That's 2121 HALF off, and it's 50% off any of our newsletters, which include the VR Canada letter, the Metal Resource letter, our Platinum and Silver letter, and our blockchain letter, which of course is a whole other subject, and our market timing letter. So we have quite a few choices out there, but I do encourage you to subscribe for the longest period so you get the 50% benefit. 2021 half off at VRTrader.com.
The official inflation rate in the U.S. now 6.2%. It hasn't been that high since 1982. Do you expect any action on it?
You know, since they don't include energy and food, you know, who knows what the real percentage is, right? I mean, it's an arbitrary decision to exclude factors in their inflation calculations. It appears there's more coming because there still appears to be shortages. I'll give you an example. I went into Whole Foods Market this evening in Sherman Oaks, California, and they had no bread. So that was, I thought, quite unusual. People were standing around looking for bread. And this is, I guess, one of those unpredictable supply chain issues that, is occurring out there, driving prices higher. Most of the smart people that I'm in touch with, whether this is engineered or it's really true situation, suggests that it could be going on a while longer, and that could put more inflation pressures on everything. I don't expect it to abate so soon. I think it's going to stretch out a bit. But the real question, I think we talked about this off air, is, is the Fed scratching its rear end, or does it make a difference?
And if we do end up with inflation that sticks around more than just a few months, will they hike interest rates to quell it?
You know, this is the big issue because, it's a political issue. It's also an issue for the government itself. Does it want to pay higher interest rates on its ever-growing debt? Will a raise in rates really make a difference? And how much of a raise are you talking about? I mean, it's virtually zero on rates. So it's not going to jump to 6-8% overnight anyway. It would take probably several years or at least a few years to get to that kind of level. And if you go up a quarter or half or 1%, does that really change anything? And it really doesn't. If people are financing homes or they're financing their business, sure, there's going to be a little bit of an uptick. If anything, it'd probably generate more inflation because people will be driving prices and trying to acquire products and services and buying homes or whatever, and scrambling because they don't want to miss the boat, thinking that it's going to continue to go higher. Again, the question is, what kind of hike are we really talking about? Over the last, let's see now, how many years? So it's got to be 14 or 15 years since the financial crisis. We've talked about this before, too. Rates have been virtually zero. There were a couple periods when they hiked them temporarily, and there's been talk over the last decade or so about raising rates. It just never really happens. It sort of starts and it stops. Then you get this new COVID virus floating around, and suddenly We're going to find out there's as many COVID viruses as there are letters in the Greek alphabet, or there's going to be some other outlier event that's suddenly going to say to the Fed, well, gee, maybe we shouldn't be moving so aggressively now because we have an unpredictable situation. So, I mean, again, it's two questions. What kind of rate are we talking about? And is it really going to happen? And if it does happen, we've seen the Fed try to do this in the last few years. It upticks a little bit and they back off. So I'm not sitting here worrying about it. And the other thing is, so rates go up, is that going to stop inflation? I mean, I don't think so. I mean, it's going to have to take, a huge jump the way we saw back in, 1980 or so, where rates were at, CD rates were like 12% and mortgage rates were up there at 15-16%. Is it going to take that type of move? And that doesn't happen overnight. I know we're comparing the 1970s to now by some analysis, but I don't think you compare it that way. So I'm not sitting here worrying about it. Stock market doesn't seem to be too concerned about it. I mean, it's virtually at all-time highs, sold off for a few days, and seems to come back. So I don't think it's, sure, if they act next week and they do something, then, but there's so many other things to talk about, Jim. We mentioned this as well. I mean, it's not just raising rates. Is the Fed out there supporting the stock market? So even if the market comes down, will it come back up anyway? There's other things the Fed can do out there besides raising rates, including buying and selling bonds and so forth, including acting, as I mentioned, in the markets themselves. So I think it's really more what the news environment is. What other outlier events are there? I mean, we're going to war with Russia. Is Taiwan going to be invaded? Is Iran going to have a nuclear bomb next week and do something about it? I mean, there's so many other things. Are we going to get some geocosmic event, that's going to affect the planet? We've seen, and just the last few days, we've seen increased earthquake activity off the coast of Oregon, not too far south of where you are. And maybe there's going to be some earth changes, get a couple natural disasters hit the planet. Suddenly things change. Volcanic activity is increasing. We've talked about this before. So a lot of things could impact the cost of our goods and services, the accessibility of food, whether the Fed's going to act or not. So we got to take it a day at a time here. But I don't think the movement of the Fed is the controlling factor, and whether it's really going to change anything so dramatically. The way I read it, I think you're going to see inflation continue through the year, and you might see, a little bit more of an acceleration, and we'll just see where all that takes us. It's sort of crazy because we're not seeing gold and silver respond, and we're seeing, like you say, the Fed not really doing very much about it, but I don't think they're going to really change things. I mean, they'd have to jump rates 5 or 10% overnight, which they wouldn't do, and that would kill the world economy. So I think Powell is probably being cautious, and probably rightfully so, and we'll just have to see how it unfolds. But I don't think it's going to change very much. I'm not looking for any dramatic move here from the Fed changing the status of our economy or the stock market. I know everybody talks about the Fed tapering and not tapering, and sure, if they do something, you might get a little pullback in the market. But I think the market really comes down, the stock market or the economy of the world. There's something else that's going to trigger it. Again, virus situation, geocosmic event, or something else is going to happen that would cause a substantial shakeout of this inflationary spiral that we've been seeing. So let's see how it plays out into the new year. But we have the Santa Claus rally supposedly ahead of us into the new year. On a seasonal basis, you tend to rally into the new year. We'll see if this year is any different. And let's see how it unfolds.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, with all the real estate problems China is having right now, is China a poor place to put your money?
I don't see it that way. There's momentum still there. I wouldn't be chasing stuff, but like anything else, there's a shortage of supply-demand situation, and if inflation continues, regardless of what the Fed does or doesn't do, I think there's going to be an increase in prices. I would say real estate can continue to advance this year or possibly into 2022, 2023, and let's just watch the numbers. Sure, it's high. It's like anything else, but we've been talking about a stock market that's been high for the last year and a half since the COVID fiasco, and yet it continues to make gains. Where's the top? I don't know where the top is, but everything I'm seeing is real estate's being gobbled up. There's a flight to physical assets. Some people who are fearful of the stock market, for example, would say, I'm going to buy real estate instead, particularly income-producing real estate. And the best reading I can give you is, I don't see an imminent top. I don't know whether we've actually seen a bubble yet or not. Some people say it's a bubble. I don't know if that's true or not, but there's an overriding demand for real estate, and it's still there. I don't know where the end is going to come, and history doesn't repeat itself the same way, because we saw a bubble back in 2006, 2007. Everybody says, well, same thing's going to happen again, and yes, there are market cycles, and of course it will eventually correct, but I don't know if it's going to crash or anything like that. So my best reading is interest rates are still relatively very low, even though there might be some little uptick. Nowhere near, we're still very, very close to historic low levels. So, real estate's still okay. I mean, again, you got to be careful of where you're buying and whether you're doing it for income and so forth. But, there's going to be a top somewhere, but I don't see it as an imminent situation, barring some dramatic event, like we talked about, some outlier event hitting the planet or something, then, of course, everything changes quickly. But just looking at the numbers, it still seems to me this nice and plentiful demand out there for the right kind of properties, particularly outside the main cities, if you're talking about residential, particularly with the increase of the virus and concern about safety within the cities, if there's more civil unrest and so forth. That's still driving money into alternate properties outside the urban areas. So there still seems to be demand for it. And I would say, bottom line, I'm being long-winded. I'm still bullish.
What about precious metals?
I keep getting comments about that, and I sort of respond, because I haven't been that excited about the metals this year, though I was thinking we could get a rally here toward, at the end of the year or into early next year. I remember there's been several years where you get a sell-off into December, or you hit a low point or near a low point, and then you start rallying into the next year. And we are in this theoretically seasonally positive period that carries into February, and we are a little oversold here, but I haven't seen any technical magic switch thrown saying, hey, this is the big reversal, this is the time to get in. Like any market, it's going to rally when it wants to rally. But I remember a couple of people saying it just doesn't make any sense to me while gold and silver hasn't rallied, and nobody really brings up the subject of government manipulation or interference in the market. I mean, there's a group that I've been tracked for very years, and I'm giving them a bit of a plug here, GATA.org, GATE.org. And for 20 years, they've been tracking, the manipulation in the precious metals on the parts of government, and just a lot of manipulation in the commodity market, suppressing the prices of the metals. So when people question to me why gold hasn't rallied, well, as far as I'm concerned, gold and silver should be multiple times higher than they are now. But there's been strong evidence of government interference in this market, suppressing prices. Why? Because of gold and silver exploding to the upside, particularly gold, maybe not so much silver, since it's a industrial commodity. That would discredit government. Gold sitting at $3,000, $4,000, $5,000 an ounce. People it's a bad mark on government's ability supposedly to manage the economies, and loss of faith in currency and so forth. So it's the government's interest to suppress the price of metal. Some people ask me why it's not up. I say, well, the government's active suppressing the price of it. They're going to we don't know when they're going to not suppress it or let the free market do what it wants to do. So to me, that's more of an issue than whether we have inflation or whether there's a shortage or not, and so forth and so on. But if you just want to stick strictly to the non-government intervention aspect of it, it lost favor a little bit because of cryptocurrencies, which unfortunately have gone to a little bit of a correction now. But for some reason, it just hasn't caught fire on the part of the of investors, and I'm sure at some point there'll be a nice rally. So I'm not going to say that you should never own gold and silver. We just have to be aware that it's cyclical like anything else, and there's government interference in its price. And, we're just going to have to we'll wait for a strong technical signal. I mean, my personal feeling is we should have a rally here at some point into the first quarter, but I'm waiting for a clear technical buy signal.
Mark, thank you so much for chatting with us.
My pleasure, Jim. Thanks, and speak to you next week.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters. If you have any questions for him, you can send them to info@howstreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.